First Premier Lending Loan features, strengths, weaknesses. First Premier Lending specializes in installment loans tailored for individuals with less than perfect credit. A key feature is their accessibility. They often approve applicants that traditional lenders decline, focusing on factors beyond just a credit score. Loan amounts typically range from $500 to $2,500, with repayment terms spanning from 12 to 36 months. Interest rates, however, are significantly higher than average, reflecting the increased risk First Premier Lending assumes. Who is this loan for? Primarily, it targets borrowers who are rebuilding their credit or require immediate funds for emergencies and have been denied by other institutions. It's a stepping stone, not a long-term financial solution. Let's examine the strengths. First, the approval process is relatively quick and straightforward. Second, even with a poor credit history, you have a reasonable chance of approval. Third, making timely payments on a First Premier Lending loan can positively impact your credit score, helping you qualify for better rates in the future. Now, for the weaknesses, the elephant in the room is the high APR. Expect interest rates to be in the double digits, often significantly higher than secured loan options or those available to borrowers with good credit. This means you'll pay back considerably more than you borrow. Another con is the potential for fees, including origination fees or late payment penalties, which can further inflate the overall cost of the loan. Furthermore, while loan amounts are sufficient for smaller needs, they may not be adequate for larger expenses. Finally, customer service reviews are mixed, with some reporting difficulties in resolving issues. Before taking out a First Premier Lending loan, explore all other options, including credit union loans, personal loans from online lenders specializing in bad credit, secured loans if you have assets to use as collateral, or even borrowing from friends or family. Only consider First Premier Lending if you've exhausted all alternatives and require immediate funding despite the high cost. Factor in the APR, repayment terms, and potential fees to fully understand the total cost of the loan. Remember, the primary goal should be to rebuild your credit and transition to more favorable financing options as soon as possible. This loan should be viewed as a temporary solution, not a permanent crutch. Carefully assess your financial situation and repayment capabilities before committing.